So good afternoon, good morning, good evening, depending on where you are joining from. We're very excited to have a very special session today with two amazing Endeavor entrepreneurs. For those of you who don't know me, my name is Amr Al-Abd, and I'm the Regional Managing Director for Endeavor Middle East and Africa. I'm delighted to welcome you all today. Today, we're honored to have two very special entrepreneurs, Pedro Arnt, CEO of dLocal and former Executive Vice President and CFO of Mercado Libre in Latin America, and Mostafa Amin, co-founder and CEO of Breadfast in Egypt. Pedro is a veteran Endeavor mentor and an ISP panelist. Mostafa also completed his first ISP as a panelist, sharing the panel with Mudassir Sheikha of Kareem and also the chairman of Endeavor Pakistan. We're excited to share that we almost have 700 registrations today from 50 countries. So this is like a record number that we've never seen before. So we'll begin with a fireside chat for 20 minutes, followed by 40 minutes questions and answers where you can interact directly with the panelists. Throughout the webinar, please feel free to ask questions using the Q&A button. Your questions will only be visible to the panelists. Thank you all for joining us. Mostafa, over to you.
Thank you so much, Amr, for the background. And yeah, I think this is exciting. Hello, Pedro, and welcome everyone. And as Amr said, good morning, good afternoon, and good evening, wherever you're joining from. Pedro, how are you?
Excited to be here. Thank you for the chance. And I was telling you before, I think we've put together some really good questions. So this should be fun.
Amazing. Where are you calling from today, Pedro?
So I happen to be in London. dLocal has become a global behemoth. So I've been traveling a lot. And you're catching me in London today.
Great. I see sun, so I was doubting. I don't think this is London, but great, it's sunny in London. Perfect. So yeah, for those who are unfamiliar with Pedro, Mercado Libre, or dLocal, very curious, how did it all start?
Yeah. So many years ago, I'll date myself here, in the late 90s, I had studied to be a university professor in political science. I have a very strange background for someone who then went on to do what I did. But I was working in management consulting, and we were helping out a lot of the large telcos with this new technology called the internet. And I absolutely was blown away by all the potential I saw from it going forward. And after about a year of trying to tell the telcos and other large corporations what they should be doing with this new technology, I think we all realized that it would be much more interesting to go and do it rather than try to get a large corporation to try to do it. And at about that same time, Marcos, Hernan, I think they were the second or third Endeavor entrepreneurs. So this is still 1999, had moved back from Stanford and was starting this new internet retailer in Latin America. I really liked them. I liked the vision. I believed in what they were trying to build. And so I joined Mercado Libre in late 99.
Wow. This is early. So you've seen it, I think from the beginning. And, if you can also, tell everyone about dLocal, and then I think we'll deep dive into, the technical questions.
Yeah. So after almost 24 years at Mercado Libre, I felt like two things happened. I think that for the stage Meli's at now, I think that's amazing company, unstoppable force. But the size and the type of challenges we have today, I think many of my colleagues there today are potentially better suited to take on and enjoy more than I did. And I wanted to go back into the trenches, to build again, to be at an earlier stage of a company. And I think I've known Sergio and the team there for some time. We were living in the same country. And I think dLocal is an amazing opportunity. I've always thought about global South, emerging world, and how you could potentially invest in the emerging South in the internet revolution in the same way that we did with Meli in Latin America, right? What's interesting about dLocal is that it allows you to do that indirectly. So it's a much more hedged approach. It allows you to gain exposure not only to local emerging South companies, but to how the global large companies, so the American companies, Meta, Netflix, Google, Microsoft, the Chinese companies, right? Shein, Temu, Didi, Ant Financial, Baba, how they will do in the emerging South. So really the secular thesis becomes the global South consumer. And as he closes the digital divide and gains access to digital products, how you're able to grow along with that growing consumer. And so it even has a purpose that was incredibly attractive for me. And so when the opportunity came to join them, it was a heart-wrenching decision because of where I had to leave, but the right timing and the right opportunity for me.
Amazing. I'm personally super excited to go deeper. I mean, it's a great opportunity, to talk to a world-class operator like yourself. I mean, 24 years, right, at Mercado Libre. I think this is super unique, and I think many of the attendees today are representing emerging markets, right? So lots of similar challenges, lots of similar opportunities. So I would love to if you can give us some insights. Basically, you joined Mercado Libre late 1999, and you've been there for 25 years. I mean, how it happened that you became the CFO of the company?
Yeah. So look, it's an interesting journey. At the end of the day, and I think we have more interesting things to talk about than me. I'll be short with this one, but I always liked to do things at the places I've been that I thought were challenging and had impact. I didn't really have a preconceived notion of I want to work in finance, I want to work in marketing, I want to work in operations. And I think that's been really helpful. I mean, I have the least CFO background of any CFO probably. As I said, I studied political science in my postgraduate degree and literature in my undergraduate degree. But I went after challenging work for Marcos. So I headed marketing for a while. I did business development. I set up the customer service operations. I set up the fraud operations. And it was always about where can I do something that's challenging, interesting, where we're having problems and I can have impact. And eventually when we got to the IPO, the CFO at the time, Nico Sekasi, who's on the global board of Endeavor, he said, do you want to come and help me do this? And I thought, look, I don't know much about finance, but it seems like challenging, impactful for us, and I'm going to learn a lot along the way. So absolutely. So I started in a role of IR strategy and treasury, and eventually I learned and grew within the finance organization and became the CFO in 2010.
This is, I mean, actually I was with Nico last week on one of the panels, and I was planning to say someone who knows you, he said that I think you want to invent glasses for kids, you love glasses. And then he was laughing and he said ask him this question, but don't tell him who said, but he said me. If you can, what does he mean by this?
Yeah, that's a small anecdote, but we had a very big presentation with a very big potential investor. This it was actually a strategic investor that was a big part of Mercado Libre's story. But I was, I think, something like 28 at the time. And I had to give one of the presentations, and I looked 19 or 17. And so we got me a pair of glasses without magnifiers because they made me look a little bit older. So I gave the presentation with the glasses, and then no one ever saw me with the glasses again. Now, 30 years later, I actually have to use glasses to see, but not back then.
Okay. I think, it's interesting, for us to double click on the IPO, right, story and, the transition, right, on the decision of going IPO, right? So if you can take us, let's say 2 years before the decision of, listing Mercado Libre, what was the challenges, how did you guys make the decision actually to go and list publicly? And yeah, I mean, we can start with this.
Yeah. Sure. So I'm going to start with a bit of an anecdote, and it's an anecdote that Marcos has told on record many times. So I'm not giving away anything that's new. But and the reason I'm telling the anecdote is to me the most important thing is to make sure you've really thought through what the reason to IPO is. Sometimes I worry that in entrepreneurial circles that we live in, the IPO has become like the validation or the ultimate dream. And that's probably the wrong reason to IPO. In today's markets, you can find a return, you can find an exit, you can finance yourself in private markets. And I would argue it's a much better option for most companies. Many companies end up IPOing either to find liquidity for existing investors or for some other reason, which isn't the right reason. Melli was actually a dual track process. So we were engaged in strategic conversations with potential buyers that had come to look for us. And we had used the IPO to a certain degree as a way to tactically negotiate with those potential buyers. I think if you had asked most of us, we would have thought the IPO was a highly unlikely outcome. But then for different reasons, the buyers agreed with Marcos and then pulled back. And we found ourselves on the verge of being a public company, right? In hindsight, it's the best thing that ever happened to us. So great. Sometimes mistakes pay off. But I don't necessarily think that it was used in the right construct. It was used in part because we really thought the private outcome was more likely. And becoming public has very specific, I would say, needs, requirements. And so you should do it for the right reason.
Interesting. I mean, I believe everyone, is aware of the, let's say, like the fundraising, challenges, right? Like especially with the global macros and the local macros, emerging markets macros, right? I think, like it would be great if you can walk us through the way you thought, of the balance, right? The CFO of Mercado Libre between growth versus profitability, or what we call it today, like profitable growth. I mean, how did you, like balance the need for growth? And at the same time, like it's very important also, right, for a public market company. Even a long time ago when you guys listed, I believe you listed in 2007. How do you see this like now versus, like long time ago?
Yeah. So let me take the second part of the question first, and then I'll answer the first one, because I think it's a sequence of what we were talking about before. So first of all, I think in today's world, which is more liquid even now than it was back in 2007 for emerging markets, and where you look at even some of the historically public market investment pools, the Fidelities, the Wellingtons, most of the T. Rowe Prices, most of the large shops, so the shops where a lot of the money sit, they already do a lot of crossover stuff. So they can also do private. So I don't think that thinking that an IPO gets you access to capital that you won't have if you're private is accurate, right? Don't do it because you think I'm not raising capital in private land, so I'm going to be able to raise capital through an IPO. That's a misconstruction. If you can't raise funds privately, it's going to be even more difficult publicly. And here's why. I think for better or worse, there are specific characteristics, and I've tried to think of some of them, of what a public investment should look like, which in a way is not necessarily the same as what certain profiles of private investors can accommodate within their mandates, right? So public investments have to have a certain element of predictability in their results and their cash flows. Volatility is the enemy of the public market investor. If you think about it, a VC or even a PE, they're really getting rewarded for finding one company that really makes a huge difference. And making mistakes is absolutely accepted in VC land for VC investors. So their risk appetite is radically different from a public market investor that's really going to get measured against a benchmark. And he's probably less worried if he didn't make 5x than if he beat the benchmark by 2%. So the worst thing you can do for him is give him something that's very volatile. And you know what? Emerging market growth is very volatile by definition. So you need to have predictability. That usually leads you to have a certain amount of scale, which at least diversifies your revenues enough that you can offset some of the volatility, right? And then your business model ideally isn't one that's exposed too much to macro or exposed too much to consumers, which are macro exposed, because in emerging markets, that's a lot worse. Then there's a currency overlay. Right? So I really think that for our universe, or for most of our world, which is growth, and in many of our cases, tech-driven growth, which is disruptive, which sometimes needs significant pivots, being private actually makes more sense for most of us. And that's why when we think over the last 10, 15 years, we saw the emergence of these private tech companies that were worth tens or even hundreds of billions of dollars. Because I think the liquidity became available, and many of these incredibly smart entrepreneurs realized that they were better off being public for as long as they could, so that they could continue to pivot, tinker with their product, innovate, and go to market strategies. And eventually they become so big that then they have to go public. But I really believe, I think I'm more of that thinking. We can talk about the advantages of being a public company, and there are some if you fit the criteria. If you have a public market fit financial model, if you've put in place a lot of the governance, the systems that are necessary, if you found this equation between growth and margin, right? Which is much less necessary in private land, where you can easily explain to your investors what you're doing. So how did we manage that at Melli? Long answer, but you bundled two questions into one. First of all, quite honestly, I don't think we were ever super sophisticated. I think we were always a growth company. Marcos was also always extremely good about saying, we're going to push for growth. We're going to invest capital aggressively. We're going to try and we're going to make mistakes. And that's how you build a great company over time. And so it was more for me as his CFO, how do we risk manage that, right? So we had a couple of rules that I think were very ingrained into how we did things. First of all, we never did things that would put the entire company at risk. So we would make aggressive deployment of capital, but we would always make sure, if this really goes wrong, if there's a big black swan here, do I risk the company? And if I do, then I'm not going to do this one. I think we were always very built for flexibility, and we really listened a lot to that Jeff Bezos things of, is this a two-way door that you can deploy the capital, try, and then come back? Or is this a one-way door that once you've crossed it, coming back is really difficult? And we tried to be very selective and much more cautious with those decisions. The ones you could pull back from, let's move quickly, let's try, we're going to learn a lot from trying. And so there was a bit of a way we used to try to manage this, which we would say, we'll give the manager the initial capital, and we'll see if there's traction. If he's growing the core KPIs really fast, then double down and double down and double down. If the core go-to-market and consumer acceptance metrics aren't there, then don't double down. Hold back and see why it's not working. Work on product. Fix what's wrong until it takes off again, and then you double down. And if it's not, we were very persevering. I'd say sometimes we were too persevering, but don't give him too much more money, but let him continue to play. Let him continue to try, to fix, to change. So there are parts of Melli that even 20 years later didn't necessarily become undisputed leaders in their vertical, like most of the other things that Melli does, but are still there. And we're still trying and we're still tweaking. We've just never really backed it, or they've never really backed it with more and more capital. I think they've been disciplined until it unlocks. So really, it was more a construct of usually focusing on growth, making sure that it was disciplined growth, but aggressive. And then when businesses did become leaders in their space and had a clear scale advantage, then you start squeezing for margin, because if not, you're squeezing too early. But now just one more thought. You also have to be careful to assume that you can always apply the same type of frameworks everywhere. dLocal is a whole different story. So dLocal doesn't have network externalities like Mercado Libre's businesses does. there are scale advantages, but they're not necessarily as relevant as e-commerce and logistics, where winner takes most. And so with dLocal, my framework for deploying capital and growth is much more focused on margin and cash generation. Because if not, you're spending stupid amounts of money and you're not generating those moats that maybe you did in a business model like Mercado Libre. And I just bring this second factor in because there isn't a one-size-fits-all approach to the balance between growth and margin. It very much has to do with your business model, your competitive dynamic, what you get in terms of long-term returns from deploying capital. And that's very industry-specific and market-specific. That was a very long answer, but two questions built into one.
Really, thank you so much for this. So, I mean, we want to open the Q&A, but like a very quick follow-up question on that. I mean, these are very, very hard strategies, right? Like very, very hard strategies to execute on ground. And I believe the team is the biggest part of it, right? The question is, how did you and the team at Mercado Libre, right, like build or navigate, how did you build or navigate, you know, the hard navigation, right, of emerging markets? And I believe this is a big part of the culture at the end of the day, right? So like, I think how was, you know, the culture and how, why the culture, you know, like pushed this direction of execution, right? To make sure that you can actually execute all these strategies and thoughts on ground.
You're absolutely right, right? At the end of the day, people is everything. And depending on your business model and what it needs, there will be a winning culture that you'll have to figure out. I remember when I joined dLocal, a lot of people asked me, so you're coming to dLocal to build Meli's culture? And I said, absolutely not. Like that would be the biggest mistake on earth. dLocal needs dLocal's culture because it's a B2B company. It has a much bigger global footprint than Meli. It's a completely different business. I'm not here to try to build Mercado Libre's culture at dLocal because that is bad for dLocal. I'm here to try to help us maintain, solidify our culture and use it to continue being as successful as we've been, right? So you have to understand the right culture for the right company. Now, there are things you can do, and you guys have read this, but I'll repeat it because I actually believe that these are very effective. The first one, and it's the hardest one, is hire for culture. Like make sure you've built in the cultural assessment as a big part of how you hire people. And it's not a gut feeling. It's specific questions and specific things you're looking for, and you're asking people to show you how they've demonstrated that. The second one, which is even harder, is fire for culture. This is what many people call like the no asshole policy. And it's not really about assholes. It's you're going to run into many, many people that are delivering results, but are not culturally aligned with what you want. And that's short-term beneficial, long-term horrible, because it kills your culture. So you got to get rid of those people. A close correlation to that that's very important is you can't say, this is my culture, this is what I expect culturally, and then you go and promote someone who everyone knows doesn't align, right? You need to be very consistent with all your HR platform that you're recognizing for culture, you're promoting for culture, you're paying for culture, because that's when people really begin to believe. So that's also important. And then the third element, I think, is just the symbols and the narrative. And you have to make your culture very tangible. So you actually need to put in the work to say, these are the cultural elements we're looking for. These are the attitudes and the type of things you do if you're aligned with this culture. And you really need to communicate that. Because if not, what I've seen happens is that everyone starts interpreting culture in a way that's convenient to them. So I'll grab the one thing I'm good at and I'll say, this is our culture. And then someone else will grab the other thing. And everyone says, culture is what I do, the leaders, rather than, hey, look, we've really established clearly what culture is. I think if you commit to those 4 or 5 basic tenets of creating culture, it'll work, right? And at the end of the day, you can have slightly different variations within the organization, but you'll have a cohesive whole. And like you said at the beginning, I think that's absolutely critical.
Amazing. Thank you so much, Pedro. Actually, I have a very long, list of questions, right? Like, related to market expansion in emerging markets, related to compliance and governance, right? Like pre-IPO, related to even post-IPO, right? Like environment. But I think we'll move to the Q&A to make sure that we're actually, talking to the attendees. So, I mean, lots of questions as well.
He does have a lot of very good questions. I can vouch for that. I've seen them.
So there's a question, what has your recent experience at dLocal taught you about being CEO versus being a CFO at Mercado Libre?
Yeah. So I thought the transition was going to be relatively smooth, right? From CFO of a 60,000 person organization, I think, when I left, to CEO of a 900 person organization that I inherited from Seva at dLocal. I was very wrong. The CEO job is a very particular job. I think it's a very lonely job, especially after Seva moved to the board. It's a much more demanding job. Everyone's eyes is on you all the time. Everyone's measuring up to you. You constantly need to be aware that you're consistently marking culture, marking direction. So for better or worse, I tend to consider myself an incredibly authentic person, very candid and very open. I have to be more guarded as a CEO. It's just the nature of the job. So it's a jump. I think it's one that I'm sure the C-level prepares you well for, but until you're sitting in that seat, I don't think you realize the level of pressure. And also the other thing that happened to me is, as a CFO, I really wanted to be very much in the details because I had one piece of the organization, and that's how I always knew how to work, right? We always believed at different places I've worked that really good managers have a good combination of high-level strategic thinking and going way into the detail. And that's true. The problem is the more you become senior, the more difficult it is to manage detail, now no longer of all the finance organization, but of the entire organization. So somehow I'm still trying to find my ground between how much I can go into the detail, which I need to actually understand a problem, and how much sometimes I have to say, you know what? I won't be able to cover everything in that level of detail. I'll have to trust my team to go that granular. And I'll just start asking the questions rather than being able to figure out the answer myself. And it's difficult to let go of that. And it's been a learning experience for me.
Great. Another question. What are some examples of high impact, low hanging fruit to make customers happier and to run a better, more efficient company? If you remember any of the, old stories at maybe Mercado Libre,
Yeah, no, sure. I was going to say that this is a very company product, feature specific answer. I think what's important is, I always say, right? Every single company in the world says they're customer focused. Most aren't. I think the most important thing of high impact, low hanging fruit is that you've actually really, not just blah, 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 but you've really built the right internal loops so that when customers are feeling the pain, the company is built so that the entire company is geared to being able to respond to that pain. So dLocal is amazing in that sense. Like if a merchant says, ouch, the whole company has been built by Seva and Jaco and Sergio and Andres to react to that merchant need. And it really is incredibly merchant-centric. At times I felt too merchant-centric, and I've tried to find a little bit of balance there, right? Because the merchant, unfortunately, or the client isn't always right. But those feedback loops internally are not always easy to build. Many times what we find in organizations is that users are hurting over something, and it's either too complex or no one's really taking care of that. It's dying in customer service, or it's going up, but it's not being solved. So I would say, more as a generic process scalable answer, is make sure that that whole journey from listening to the customer, really listening and picking up the pain points, and then how that flows internally and becomes a solution to the consumer is how you generate a repetitive cycle of identifying high impact, low hanging fruit problem solving. Because if not, the answers are just too specific for one company. Or that build that process, really make sure that, like Jeff Bezos, the famous question mark email he sends when he gets an email with a customer with something he doesn't like, he would send the email to the relative head with just a question mark. And so culturally, what they're saying is, if a customer complains, we do something about it.
Clear. I mean, lots of fresh questions, like coming in, and the next question is, how did you think about increasing wallet share and e-commerce penetration in a given country versus multi-country expansion? I think this is a very interesting one, right? Like, especially also in emerging markets. If we can, also like give us more insights into, market expansion in emerging markets, I think that would be amazing.
Yeah. Okay. There's an anecdote I tell, but I can't give names. Early on in the history of Mercado Libre, there was a huge strategic debate, right? Should they pursue one market very deeply, or should they pursue a rapid Latin America expansion? And the rapid Latin American expansion vision is the one that won. And I think that was the right decision by all means, because it was a larger market. Now, it's not necessarily true that in e-commerce, because of logistics and other things, there's infinite leveraging of what you've built in one market to other markets. Even the technology isn't always that easy to deploy because you're plugged into local payments processors and other things. dLocal makes that a lot easier for you, by the way, but that's just a shameless plug. But I do believe, and especially if I think of the part of the world where most of you are from, which we're doing a lot of work in, and we see huge potential, right? We don't really have in MENA today one massive market like a US or a Brazil or a China that you can say, this will get me the kind of scale that I need to aspire to become an IPO-able company. Egypt, you have a couple, but very few. Right? I'm thinking of Fawi, for example. But so I think really for you guys, as it was for Meli and is for dLocal, that comes from tiny Uruguay of 3 million people, you have to be multi-country. And so the sooner you get on with that journey, the better off you are. It's more complex, but it's where you're going to have to be if you want to really scale out your businesses. So I would think of being a regional champion, and everything that implies. And we can talk for hours about that, but I'll probably leave it at that today.
Amazing. Thanks, Pedro. Next question is, how did you deal with the currency fluctuations in Argentina? Like basically it's the home market of Mercado Libre. And I think this is actually a very relevant question, like to Egypt, for example, right? Like, how did you guys deal with that?
Yeah, very similar, very similar. I feel like Argentines and Egyptians in terms of currency management are both global experts. Look, I'm going to give you a disruptive answer is the following is don't overthink it. Like focus on what you can control. You're not going to control what the pound does or what the Argentine peso does. So if you feel that for your business, hedging it out makes sense and is possible, then hedge it out. And if you can't, then don't and move on. Meli, we used to manage performance in local currency, right? Because we used to say, we don't want our operators, our e-commerce people worrying about currency fluctuation that they don't control. Someone in the treasury can hedge what's necessary to hedge. We're not going to hedge results because we don't think that's the appropriate use of shareholders' money. We may hedge obligations, or we may hedge currency needs or debt, but that's it. And then get on with building great experiences for your consumers, efficient operations, optimizing your P&L, and don't worry about what you don't control.
Yeah, I mean, for the, for the same question, I can just, confirm what you just, said, Pedro. I mean, in our case, actually, avoiding the negative morale, right, about the currency and all of that, and just being focused on the growth. Actually, this is what we do, and it really beats, any type of devaluation, right? If you can grow the company, like 3 digits year over year, right? Basically, it's fine. So I mean, I just can confirm this, execution, let's say, like psychology of just go and focus, like on what you're trying to build, enhance your customer experience, and just to grow, right? You will be able to overtake or override any, other challenges. So thank you for
I
this.
like that. I like that. I like that. Especially in the early days. I think I remember we always used to when people would come to us with explanations for underperformance that were about macro. I remember we used to say, just leave the room. If you're going to say that in our industry, macro is driving what you're doing, you haven't understood our culture. Our especially in the early stages, that changes as you get very big, right? But we will unlock growth if we find a pain point, usually in product or technology, and we fix it, not what's happening at a macro level, because the secular tailwinds are too strong. So that's bullshit. It's not macro. You haven't figured out what's not working about our product or service. Go and figure it out.
100%. Next question. What are the largest untapped opportunities to pursue in emerging markets where the local e-commerce champion has a major advantage?
Yeah. I think emerging markets, I'm moving away from e-commerce, are this phenomenal opportunity. That's where growth is going to live over the next 10 years, I always say, and it's what excites me so much about the opportunity at dLocal, right? And if you look at the emerging market consumer in many aspects, he's more digitally savvy. He gets more value out of digital because he's usually a consumer that has a lot more scarcity surrounding him than a global north consumer. E-commerce is tough, right? Because e-commerce, like I said earlier, scale advantages are almost unsurmountable and network externalities are very, very strong. So in e-commerce, it's very tough, I think, if you really are facing a clear, scaled out leader. Now, fortunately, I think for your part of the world, I may be rusty, but I don't think any of the markets has a game over player yet. Like maybe you have in Latin America where there's 2 or 3 players that are clearly larger than everyone else. So I wouldn't worry too much yet, but if we assume that there is a absolute undisputed scale leader, then I think you need to find some sort of niche approach, right? How do I build a very vertical e-commerce experience that's very tailored to a specific category where I can differentiate enough because the very large player just isn't equipped for that. So things like luxury or very lifestyle type niches, if not very difficult to unseat a Mercado Libre or an Amazon or a Pinduoduo or a Shein who have this massive scale and operational efficiency.
Makes sense. Next question. If we agree one doesn't need to go public in order to raise capital, how do you see the exit path for VCs? Then given that many partners would say companies are staying private too long, right? I think this is more of a debate between, the private investors or like VCs who, basically invested in you and they are waiting, for the exit scenario. So like, how do you?
Yeah, again, and like I said, I think many times the IPO is really for the exit of early stage investors. And if there's no other solution, then fair enough. I mean, they accompany you along the journey. They place their LP's capital into your businesses to help you grow. So you can't just ignore that. But what I was trying to say earlier is that there's a much larger number of pools of money that will take on a later stage position from an early investor in a secondary market. So I think unlike maybe what it was 25, 30 years ago, and this is not my area of expertise, but it's much more likely that you either find VCs that are willing to ride along with you, or that you're able to move from the early stage investors into investors that step in and won't necessarily demand that their investment be only primary. So you can work it similar to an IPO where you'll say, okay, I'll raise 100 million for the company and then take 300 million from my, Series A investors and Series B investors. If that's impossible, then again, I'm not saying screw your early stage investors. I think that's not the right way for entrepreneurs to think things through either. There's a reason you were able to build your company the way you were, and it's that your investors backed you, right? So they need an exit, then let's find it for them.
Makes sense. Next question. Raising more capital than needed in the stage is harmful? This is a question.
Yeah, this is an interesting question. I'm going to give the following answer. I understand where this issue comes from, that the era of sweet and easy money generated crappy, inefficient companies that didn't know how to deploy capital. I completely agree with that, okay? So there's a threat to say if you raise too much capital, it's going to make you make bad decisions, because scarcity and need is what really brings out the best capital allocators in us, okay? But I don't really buy that. I think if you're a good capital allocator, you should raise more cash than you need. Just make sure you sit on it. So I'm a big believer in raise the cash when you can. The mistake is to say, because I've raised it, I'm going to expend it. And when your investors tell you, be more aggressive, that's what we gave you the money for, make sure you have a really good conversation with them, because that's good advice if where you're placing the money actually has a return profile that could be potentially very beneficial, and you can actually have a well-instructed conversation with them about that. The problem is when VCs say that because they're seeing growth not low, and then the entrepreneurs grab it and spend it on stupid things like selling something that's worth 10 for 5. Yeah, anyone can do that. Or spending, a CAC, which gets you to a lifetime to CAC value, even though the calculation sometimes to me is bullshit, but that's 100 years. Okay, don't do that. But take more money than you need, because you take the money when you can. Just keep it sitting there, earning you your nice 4.5. And if your investors pressure you, just tell them, look, believe me, if you and I can come up with venues to invest the money that we're both convinced make sense, I will do it. I will be aggressive. I was talking earlier about deploying capital aggressively is key in growth companies, but aggressively doesn't mean deploying it for the sake of deploying it. And I've seen too much of that.
Thank you. Next question is, now that dLocal is expanding to Africa, how do you compare the opportunity and the go-to-market challenge for Latin America versus Africa?
Look, I'm hugely bullish on Africa long term. I think short term, in many aspects, it reminds me of early Latin America, where the infrastructure is being built. So when I think of many of our partners, there's a lot of work we still need to do on their product, on their stacks. The acquirers, as you move away from the larger markets and you move to the smaller markets, the technology is less efficient. The pace at which our financial partners move digitally is slower. So there's still a lot of work, I think, for us to do together. But when I look at the potential, and I look at the things that are beginning to happen, South Africa is being super, super interesting. Everything that's happening in e-commerce with Amazon, with Temu, with Shein. Egypt has been one about there being much more inbound interest in can you help me in Egypt than we're almost able to help, because there's still regulatory barriers and things that, we need to move within very strict parameters of the CBE. And so it's not that easy. But the demand for solutions in key African and Middle Eastern markets is only picking up, and we're at the very beginning of that wave. So I think you guys are in a very, very interesting part of the world in terms of digital economies and what's going to happen over the next 10 years. The next 12, 24 months, I think, are still challenging. We're still in the early stages, I think, of building out the digital infrastructure, which is loads of fun to do, right? It's just not that easy to very rapidly scale up a business as maybe it would be today in LATAM or parts of Southeast Asia.
Makes sense. I think the next question is more of a double click on the previous question. It's basically talking about expanding into, right, emerging markets. I mean, if I can articulate it differently, right? Fintech, let's now talk about more of a fintech because like it's very specific to very customized, localized regulations, right? And this is not even talking about Latin America or, you know, like versus Africa. You can talk even about this within Latin America, right? From Chile to, you know, like Brazil to Uruguay, right? Like, how do you structure, you know, the teams that's going to execute actually within different environments when it comes to FX, regulations, maybe compliance? Because this is very, very, again, specific to the fintech story, right? Is there a specific strategy you can, you know, like maybe walk us?
Yeah, I don't know if there isn't or if I'm not aware, but here's an example, right? The two organizations I spend most time at, Mercado Libre was centralized, but had a lot of weight in the local markets because you had both consumers and operations in market. dLocal is very different. dLocal has its consumer, its client, the merchant is all in the global north or in China because we service American, European, Chinese companies into emerging markets. And then we have our operations in emerging markets. So by nature, I think we've been more separated. We have sales efforts in the north, operational efforts in the south. Regulatory stuff obviously is always very market by market. So those are operations you need to build locally. dLocal treasury is fairly centralized in London with local treasurers, but a lot of the global directives come from headquarters in terms of the hedging programs, right? How to manage currency exposure with input from the local treasurers. But I don't think I have, you know, there's one model that works. I think figure out your organization and see what makes most sense to you. I wish I had a better answer. I don't.
Understood. Thank you. Next question is, if you have to choose one fundamental element that foster an innovative and productive work environment in a rapid growth periods, what would it be?
Two things came to mind when I was looking at that question now. The first one is, you guys are the founders, if you guys are the senior leaders, you set the tone. So even if you're not a technical founder, everyone is looking at you. So you need to make sure that you're involved in product, you're involved in innovation, you're actually spending time there, and the questions you're asking and what you're demanding of your people are about innovation. Innovation is not going to happen if you tell your CTO to go and innovate. I always remember Marcos did something amazing, and he's not a technical founder, but he moved to the development pit with the developers for like 3 years. He was just learning from them, but it was a very strong cultural statement, which is product and innovation drives this organization. That's where I should be sitting, not with the business leaders or on my own or with the finance guy. I'm going to go sit with the engineers. That's one. The other one that I think we learned is you need to allow people to make mistakes, right? Everyone knows that. Innovation gets stifled if we're too demanding on mistakes. But at the same time, if you basically say, fuck up all you want, then you generate a culture of operational inefficiency and laxness and poor product building. So you have to be very good at being able to differentiate between, I will encourage mistakes if you are actually trying stuff out for the first time and innovating. I will be very demanding and harsh on mistakes when it's a mistake of something that we should already know how to do. And it was interesting because at Mercado Libre, we had to learn that in the middle of the journey. Like we had really fostered mistakes because we wanted to innovate. And then people were hiding behind that when they messed up things they shouldn't have messed up. So we had to say, wait a minute, mistakes are okay when you're innovating. They're unacceptable when you're not. And we're not going to treat all mistakes the same. Some mistakes will have a very harsh punishment and others will almost be encouraged. I'm sure there's more, but those are the two that come to mind just off the top of my head.
So much. This is very, very useful. This is another question related to Egypt and North Africa. It would be great to hear from Pedro firsthand the plans and ambitions, like in Egypt and North Africa and the North African continent. So do you have any specifics when it comes
to... Sure. Within North Africa, Egypt and Morocco, I think, are the two we're most interested in. We've basic capabilities elsewhere, but those are the two. We spend a lot of time in Egypt with the CBE, with our sponsor banks, with our merchants, with fintech providers. It's a market that we really want to be able to increase our capabilities, even for obvious regulatory reasons, with local data warehouses and hosting companies. So Egypt is a market that we've put a lot of work, effort, and time into because we really think it's an attractive market. I confess, I think we put more work, time, and capital than we're getting back from. But if you look at our financial results, Egypt today, from a gross profit perspective, is already probably our third or fourth market within 40. So it's a super important market for us.
Nice. Have you been to Egypt, Pedro?
I still have to. I have not, and I that's when I have to do again, third or fourth market.
Yeah, but I mean, it's only 4 hours flight from London, so please welcome, and we will be.
I will take you up on that because I have to get there sometime soon.
We'll show you how we bake breakfast, and then we'll take you to the pyramids. So 4 hours flight only. Welcome anytime. Next question is, what new technologies or innovation should companies in our industry be watching closely? I believe, I'm not aware of the industry that the attendee is asking about, but it's either e-commerce or fintech. So if you can, how do you spend your time right now, watching the technologies, right?
We're not going to get through. I know we're not going to get through a panel without saying AI, right? So in addition to AI, look, there's so much interesting stuff going on, right? This is a bland answer because nothing's coming to mind very specific. I have spent a lot of time on AI lately for operations and for fintech, but again, I think there's so much technological innovation going on globally that whatever answer I give you here is not going to be useful. Just one thing we've always done really well at companies I've been is we spent a lot of time learning globally and looking globally, making sure we're copying what's happening. I've been to China twice in the last 5 months. And every time I come back, I'm just amazed by how much I learned and everything that's going on. And the same with the US. So I don't have an answer of specific technologies to go look at, but I do think, put in the necessary time to go to conferences, to send your technologists to conferences, especially for those of us that have our development centers not in California or in China, send our people there a lot because there's so much to learn.
Great advice. Thank you so much for this. We almost have 3 minutes left. Lots of questions, coming from the Q&A. So thank you everyone for submitting all these questions.
Can I choose one more that I saw here that I do have a good answer for, so I can make up for the wishy-washy answer on the technology one? So there's one here that says, how did you guys structure sales and marketing, right, as a global organization? And here's what I think I've learned over the last year from our CRO, which is we've increasingly put sales, account management, and customer support where the merchants are. So we've grown our team in China a lot. We've grown our team in London and the US a lot. And that's to have more and more support for the merchants where the merchants are. And then ops and all the back offices is much more centralized, and it's much more in Latin America or where it's cost effective. But sales, be where your merchants are. physically be. It's a lot harder, although your salespeople will say, I'll get on a plane whenever I need to. The chances of a random coffee encounter with an important person at the merchant are significantly diminished if they're not in the same city speaking the same language. So as soon as you have enough margin where you can actually invest in deeply localizing your merchant-facing functions, sales, account management, customer service, do that. It will pay off.
Amazing. I think final question from the Q&A. Thank you, Pedro and Mostafa. Then the question is, how do you choose which is the right stock market you want to IPO in? If your business has an enterprise SaaS and has revenues, right, and a strong traction across Europe. I believe this is actually a very important question because like you get asked, right, like where do you want to go and list? I mean, do you have any brief answer to this?
I'll give you an answer that the stock markets will hate and the bankers probably won't appreciate, but it's the following. Don't worry too much about that. Capital is incredibly global. So find a market that's liquid. Like I wouldn't recommend, for example, if you can list in London or New York, then maybe don't list in Cairo. Do a double listing, right? Do a GDR or something like that. But within the liquid global markets, like if it's Paris, London, New York, Sao Paulo, even Hong Kong, the truth is capital is incredibly global. So if there's a PM in the US that wants to invest in your company and you're listed in Hong Kong, he'll be able to invest. There are a few companies that have mandates to not do that. Like if it's a large pension fund of teachers or some government related, maybe they can't. But other than that, I think markets are very liquid. If you could pick, I would go to New York just because the liquidity and the depth, it is the largest one, right? So if you can do that and it's tax efficient or whatever, I would say do it in New York. If it's Nasdaq or New York Stock Exchange, absolutely irrelevant. Just go on gut there or who gives you the biggest set of promotional benefits. But other than that, don't over worry either. I don't think the success or not of your company as a public company will depend on where you're listed. And I've seen a lot of bankers even advise companies, oh, if you move to the US, you'll have more liquidity, the stock will perform. And then most of the CEOs, when I talk to them after that, they say didn't really happen. And my thinking is obviously not. Great companies will thrive in whatever market because investors will move their money there.
Thank you so much, Pedro. I think we're on time. Honestly, I enjoyed it so much. I believe we all learned from you today. Still lots of questions, like that maybe we didn't have the chance to go through them, but hopefully we can repeat it again in the near future. And
with you as the moderator, whenever you want to. There's a lot of great questions that we never got to. Thank you for that. I really did enjoy them. Thanks, everyone. This is a unique opportunity. I hope to see some of you in Egypt sometime soon. And again, I really mean it when I say this is a very interesting part of the world. It is one of our largest markets right now. So it's not just me saying it conceptually. It's in the publicly disclosed numbers. And we really believe in the opportunity there.
Thank you so much, Pedro. Thank you, everyone. Almost more than 40 nationalities joined us today. So this is a great diversity. And thank you, Amr. And thank you, Endeavor Egypt team, for coordinating all of that. Thank you so much. And
thank you.
Bye-bye.